The target rate is the rate at which rates are high enough that inflation comes down on its own without further rate hikes. That's the definition. So what's that number? And the Fed thinks it's 5.25. The market somehow thinks it's like 4.75, which we just got to, or maybe 5. But it's most likely 5.25, possibly higher. But I'll settle on 5.25. The Fed's not there yet. They're going to have to raise another 25 basis points in March 22nd. That's the next FOMC, and again in early May. That those two additional 25 basis point rate hikes, in addition to what we've just seen, will get you to 5.25. And then from there, you go to the pause, and they use the word pause, and Powell's like, that could last a year, and maybe early mid 2024, we're looking at rate cuts. But we've got to get inflation under control. And it's not. I mean, inflation has come down a lot. If you it started dropping like a stone in July. Now, here's the Fed's, I hate to use the word conundrum, but sometimes it applies. Here's the Fed's conundrum. They're raising rates and inflation's coming down. That's clear. But what they don't know is are interest rates coming down because they're raising rates, or have they already hit the terminal rate and it's coming down on its own and they just don't know it? And that's a big deal, because if they're at the terminal rate and they just don't know it and they keep tightening, which they are going to over tighten, probably already have. And this is going to be part of what throws the economy into a severe recession. So that's kind of what the Fed's doing and how they think about it. Now, right or wrong, okay, they're doing what they're doing. The market has their own interpretation. I agree with the market, certainly the bond market, that the Fed has probably over tightened. They probably are at the so-called terminal rate. They just don't know it. They're going to keep going for the reasons I explained. That means they're going to make it worse. They're going to make the recession even worse. And they may pivot to say that there could be a rate cut. It won't be in April, but rate cut in August, maybe. I wouldn't rule that out, but for a really bad reason. In other words, if the Fed cuts rates, which they may, the pivot may be real. It's not because they engineered a soft landing and Goldilocks and everything. Oh, it's just right. It's because they screwed up as usual, as they've been doing since 1913. They over tightened. They didn't look at the forward indicators I described, and they found out too late. And then they have to slam on the brakes, or take the foot off the brake, if you will, in terms of rate hikes, and then pivot. And we've seen this movie before. This is exactly what happened in 2018. I mean, the recession is going to be worse than analysts expect, and the bottom is going to be lower than analysts expect. We could be looking from the current levels. Bear in mind, we're down significantly from January 1st, 2022. In the case of NASDAQ, the turnaround actually started in November 2021. So we're down from those levels. We've kind of maybe reached some moving average, but we're nowhere near the old highs. But that it could easily go down 30%, and it wouldn't shock me if it was down 50%. You're looking at, S&P, 2,000, 2,100, something like that.
We are bullish bonds. In the